All right, hey there. Good morning, everybody. Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, the 27th of August, 2021. Hopefully, y'all are doing well. I'm coming to you from beautiful Boerne, Texas, and I don't know, man. Maybe in the next year or so, maybe I'll be coming to you from some sort of lakefront or oceanfront property. But until then, beautiful area to be in. Great people, wonderful. San Antonio just south of us. How are y'all doing? Hopefully you're doing all right. Hopefully you're not getting caught too bad with everything. A little bit of whipsaw action in the FX markets this morning, which was kind of expected with Jerome Powell speaking. Over there with the Jackson Hole Economic Symposium thing. It is what it is. It's all usually temporary. Your bigger trends are intact and in place. If it's going to reverse, it doesn't reverse because of what he says. It reverses because it was going to anyway. His just happens to be the impetus that people latch onto because everybody's looking for a reason. And news, which, comes after sentiment, is usually what people latch onto. But y'all are smarter than that, right? I hope so. Hey there, Eric Quinn. Good to see you. Boris is here. Merv is here. How y'all doing? ES. I'll just call you ES there. Good to see you here. Telluride, what's up? Nope, looks like you got data coming in right after you. There's some risk. Peter's here. Good to see you guys checking in. Peter checking in from London, man. One of these days, I'm going to go over there and all y'all got to meet up with me. Anyway, as always, don't forget you can join us here at howtotradetowin.com. We'd love to have you there. We got 3 tiers, depending on whatever you're interested in, but tier 3 will get you everything. It's over 110 hours of video education. It's 3 live streams a week. We look at Wyckoff charts on Monday and discuss, application to or theory to application there. We draw them out and explain what we're doing and why. Thursdays is Elliott Wave, do the same thing, and then Wednesdays is tips, tricks, and techniques, where we look in depth at indicators and show you how to use them properly and give you strategies with them, as well as other rules-based strategies. So, you got all that. You got chart requests, chart critiques, all that. I think probably better than everything else is just the community of traders we have. Most of them have been with us for so long now. I feel like they're all part of the family. Been with us for years, and I think that's what makes it such a great place for new traders to come in. But guys, seriously, you're not going to get more for less anywhere else, anywhere. You're just not. And the quality of what we do is well beyond anybody else. So anyway, we'd love to have you there. Jump on in, howtotradetowin.com, right? Texas West event in Puerto Rico, man, I keep thinking about it, man. If you guys have been following me for a few years now, I've seriously considered Puerto Rico more than once. My only issue, and the one thing that keeps me so far from really just jumping on doing it, is the infrastructure. It wasn't too long ago, just pretty recently here, that the dang, power and whatnot went out on the island. And, it's fine enough to put a generator there and all, but, you've got to have, with what I do here with y'all and with TWC, got to have uptime on that internet. And so it just makes me real nervous about, man, I don't know. Maybe I'll just have to get a temporary place there to begin with and see how it goes. But man, that the draw of the taxes, the tax rates there are just amazing. That's so hard to pass up. But we'll see. Until then, I'll just keep paying my taxes, keep making my money, and hopefully helping y'all continue to make your money as well. Hey there, Michael Williams. Good afternoon, my friend. Good to see you there. Higher Low Crypto says, hurricanes, no way. I don't know, man. I lived in Hawaii. I've lived in Florida. Hurricanes, no big deal to me. I guess I'm just kind of used to them and whatnot. So that's not going to detract me. Let me see here. Ace and Risk says a bunch of real estate guys from DFW moved there over the past 18 months. Really? I did not know that. Maybe I need to get their numbers. Talk to them a bit. Maybe I need to phone up old everybody's best friend out there, the gold bug himself. Maybe I need, Peter Schiff there. Maybe I need to give him a phone call and talk to him about it, what it's like. Hey there, Spiral Architect. Always good to see you, man. Anyway, so we've had a pretty interesting day here with Powell. Powell gets out there and basically, man, it's really no surprise. He's kind of just talking out of both sides of his mouth, more or less. He just, there's no definitiveness in anything he's saying at the moment. And I think, it's because he's giving himself leeway. I really do think the Fed is not as okay with things as he tries to make it seem. I think we had all but two, or all but three, including Powell, that are pushing for tapering. Powell and two others, I believe, are not. And so, out of all the board members, that's a lot of board members being vocal about, hey, we need to start tapering and whatnot here. I don't know if you guys listened to the speech live this morning, but man, it's just something else listening to him right now. I don't believe that we're anywhere near as okay as he wants you to believe. But, that's his job. He's got to have you believe it. I've told you guys this for years now. The only way that the Fed really gets anything done is if they convince you to do the things that they need you to do, which they need you to go out there, take out loans, and spend money. That's what they need. The Fed cannot do it for you guys. And so everybody's like, oh, don't bet against the Fed. And it's about the dumbest line I've ever heard. I don't think people who say that really understand what they're talking about. The Fed does not ultimately control the market. The people do. You and I. And in the aggregate, as long as we're taking out loans and spending money, things are fine. They may even become overheated. But if we decide that enough is enough and, we're just not going to do it anymore because we're not so, positive about what's going on here, I mean, hey, there's nothing the Fed can do at that point other than try to convince you to spend money. There's nothing they can actually do, though, to pull at that market. And, what happens if they start, pulling back on that bond buying? Or even if people just really start believing they are. All of a sudden, people aren't going to be so quick to jump into all these zombie companies. Which means all of a sudden, they're barely being held up as it is by all this. And next thing you know, they're going down, taking people with them, which takes the whole market down, and everybody gets railed. Here's the thing, guys. There is a certain point when you've been in trading for a while, what you come to understand is at the extremes of a trend, whether it's up or down, everybody is pretty much unanimously in agreement. So you got Wall Street, you got commentators, everybody is like, yeah, well, for where we're at right now, oh, it's going to keep going up, right? Oh, it's the new 1921, right? We're going for the next 10 years, right? But it's at that time that the market usually reverses. And so when you have everybody across all aisles in unison, agreeing to the same thing, it's usually not a good sign for the market. Because those macro reversals are where everybody gets duped in, where even the big professionals get duped. Because these money managers, they've got to put their money somewhere, right? They feel like they've got to put it somewhere, and they've got to do better than other people. Otherwise, people are going to pull their money out, or people are not going to be happy. So they're almost forced into this continually putting in until the market itself just trashes them, and then they can pull out. So I think I still think we're kind of getting to that. We'll look at a few of our index charts today, stock charts, and we'll show you that we appear to be coming up to the end of ending diagonals right now. The other interesting thing, if you guys follow me on Twitter, you'll know I made a post a day or two ago where I mentioned that in August of 1987, the stock market reached a high, and then it was in October that we had Black Monday, where we had that large drop, right? 30% drop in a day. For the month, it was something like almost 50%. And if you're in here, if all you know is Bitcoin, you're going, oh, that's nothing. Bitcoin does more than that. Yeah, it does. But we're talking about legacy markets, guys, with ridiculous, a lot more money than Bitcoin can even dream of having in it right now. And that was back then. Similarly, in August of 1929, the stock market reached its peak. And in October of 29 is when it began the large drop. So are we going to finish out, again, with the market, with the indexes looking like they're finishing ending diagonals right now, and we've got the 27th is today. So we've got a few days left in this month. I mean, do we hit that, is this going to replay? And now, of course, it's only two times historically, But with our indicators that we watch, well beyond where they were during '87, right before the, during that time period before the drop, 1929 even before the drop, great financial crisis before the drop. The indicators are so stretched out now that they're well beyond those levels, and so, I think if you're not paying attention, I think you're going to get burned potentially. And that doesn't mean you have to be, it's going down. But I think if you're not paying attention, you're really doing yourself a disservice. You're asking to lose money. And that's what usually happens. Everybody gets blind. Oh, everybody else is saying it's going to continue up. Oh, it's going to continue up. And then it doesn't, right? So just some things to think about with all that. Could get interesting. A lot of stuff going on, a lot of transitory stuff, as Powell likes to say. Going on at the moment, but we'll see how things play out. But I think these are definitely things worth watching right now. Doesn't mean they're going to happen. Things are going to happen, but I don't know, man. It seems definitely interesting. Let me see. Let me catch you here. Tell Your Writer says, go out, take out loans, spend money. Mostly 0 for 3 of these. Yeah, I mean, that's usually what happens. That's the way it is, guys. We always talk about it. Everybody talks about inflation because of what the Fed is printing, right? Via QE. But again, this is a complete misunderstanding of what QE is and what it's meant to do and where the money's actually going. The inflation that all the amateurs out there are thinking about is what actually happens at the bank level when the bank creates loans. And so if we look at that, again, the savings rate, I think Jerome Powell said it today, the savings rate is still like 13 to 14%, which is, and it's maintaining way up here, which is the highest it's been in like 40 years. 40 years, guys. That's insane. And it's a high level of savings. And so if there's savings, if you're saving, you're not spending money. You need churn. You need that money to continue. You need my dollar to go to you, to go to your barber, to go to his grocer, to go to the gas station, whatever. You need that same dollar to churn through the economy. In addition to, you need more people going out there and taking out loans. That taking out of loans is what creates that inflation. It's what pushes things up higher, right? But if you're paying it back, which is what's been happening, and you're saving, these two things are disinflationary. First of all, if you're paying it back, you're not creating new dollars. Now you're taking dollars out of the market. You're reducing the liquidity in the market. Second thing is, by holding money in instead of having it circulate through the economy, again, you are literally keeping money out of the market, out of the economy. It's sitting in the bank. This is why the Fed doesn't want you to do this. Or other central banks. This is why you see them going down sometimes to negative on the interest rates. And you go down to negative interest rates because at that point, you and I and everybody else, we have to pay the bank to hold our money. Well, most people don't want to do that, so they're going to, it encourages them to spend. That's the whole idea. So this is kind of, that area we're at. We're at these low interest rates. Fed's promising it won't go to zero. It doesn't want it to. So the Fed puts in, it makes these reverse repo facilities permanent now. And we're getting $1 trillion repos every night, and I mean, and so the banks, again, we keep talking about this. The banks could be out there loaning money to you, me, and Sam, but really choosing not to for the most part. Instead, choosing to just stick it in the repos overnight. Which, again, sticking the repos sucks that liquidity out of the market at night. It's a way of pulling all that, the monetary expansion that the Fed creates via QE, which remains with your primary dealers and your banks and your money markets and everything. It's a way of pulling that money back into the Fed. And so that attempts to put a price floor on that interest rate so it doesn't drop below. Because if they don't, people, the interest rate's going to keep dropping. It's a way of trying to control that interest rate. So, I mean, these are all the things we've got going on right now. And it's affecting everything. That's why things look weird. That's why they seem strange. If you take 2 minutes to kind of really look at it and look at historical performance. So, yeah, a lot of stuff there. Hey there, Mark. Good to see you. It is Happy Friday, man. Dang right. Man, have a great weekend if you can't get back in. So that's kind of where we are here. Now, Bitcoin, we had a little bit further pullback here. We've continued to look at it. As of earlier this week, we had multiple scenarios we were looking at, depending on when we could get that reversal. Prices tried to reverse a few times. They're here trying again right now, but never came above the needed confirmation levels. So right now, we're doing this thing where we had this pullback to the 61.8 here. And so it looks like we've got an ABC potentially done here, especially if you zoom in that 15 minute. 1, 2, 3, 4, 5 here. Looks like we might have a leading diagonal right here, this sideways movement since then. So we get like a 1, 2, 3, 4, 5 here. And that would make sense because as I always talk to you guys about, usually you have a wave 1 that terminates near a channel breakout. It pulls back for wave 2 and then it breaks out on wave 3. And that's what it should do because wave 3 is your strongest and largest wave. And that's what usually goes through significant areas of support or resistance, right? So we should expect to see strong volume of price and larger candle spreads as we make our way out through that. Now, so we have this particular range here, which on the breakout here gives us a target of about $2,541.50 above the point of breakout there based on the height of the channel here. What we're really looking to do is to get price above wave B here. On Coinbase, that's going to be 49,365.10. If we can get above that, that adds a lot of confidence to the count. And that would give us a minimum wave circle 3 target up here of 56,975. Don't forget, we've got our larger degree wave Roman numeral 3 here. Minimum target of 61,450 as well. Still within that. Now, the other way you can do this is you can actually probably draw a something like this here. Let me see. Let's just run it off the lows here. There we go. We can do something like this where you run it off these swing lows. Maybe. Let's see. It's kind of breaking. It just pops up above it and breaks down. I was thinking maybe we could get this where to find support on it, but nope, that ain't happening, so that's fine. We'll just keep with the other range we have here. So a couple of potential bear traps here, multiples right along this bottom here. And so, yeah, we'll look for, on this pullback, I would look for it to remain above this kind of, I don't know, it should stay, it shouldn't go any further than this larger 50% retracement at 47,116 or so. If this is one here and done, you get your 38.2 right there at the pivot. Your 50% drops right here at 47,392. That's probably a pretty good area to get reversal. So you get this like as a 1 here, and then a 2, and then you get your 3, 4, and 5 as it goes up there. Let me see here. Yeah, you know, you can get a wave 3 up here around the pattern target or around the R1 pivot on the 1 hour here. And then the 2, you know, the wave 5 just above that. So that's what I'd be looking for. The only thing, you know, you got to watch is, does it drop here below wave Roman numeral 2 here at 43,955? If it drops below that, then this isn't, you know, invalidated. And I think at that point, I just think maybe we have like a 1 done and we're working on a wave 2. In which case we might see it come on back down here toward this 39,683 level maybe. But I don't see it as this, oh, this has to be, you know, wave A from the top, wave B, and then wave C. It could be, but I think, you know, at that point, it's still way too early to say something like that because there's so much possibility still in this further uptrend. So I'm not overly concerned about it at the moment. I think those who are just kind of, you know, if they're trading based on this is the top here, I think you're going to get yourself in trouble. There's no real confirmation of this top. Heck, we're not even below that wave 2 right there. So, you know, take it smaller time frames at first and make sure you're using proper risk management. As long as you're doing that, guys, you'll be fine. It's when you get out there and you oversize, over leverage your positions and say, risk management, what's that? That you get caught and you get burned. You know, there's no fear in trading if you're using proper risk management, guys. Let me see here. Hey there, Devin. Now I'm live. Yes. Good to see you, man. White R21, what's up, man? Let's see here. Oh gosh, then you got idiots coming on here. Let me go ahead and block this person here. Just want to take care of that. So yeah, I mean that's kind of where we are here with Bitcoin. As far as the dollar, again, I mentioned that the Fed's out there talking. It gave us some volatility here. Let me see here. Oops. Let me reload this. Let's see if the new chart comes up here. There we go. I think it's possible now with this pop up and then this drop back down that maybe we've got a flat correction going on here for B. So you had A, B, and then C here. And then this drop here is wave C of 2. Could be done. Could continue lower here to 61.8. But, looking for that impulsive breakout back above what I've got as wave B here at 93.181. If we can do that, that should signal that wave 2 is done. And we're on for wave 3, which right now has a minimum expected target of 95,815. But don't forget, it's the 94. I got 559 there. Why did I got 559? It's 94,742, isn't it? 94,742, yeah. That's the one. That's the one I'm looking for macro-wise. I'm looking for a breakout above that. If we can get that, then I'm feeling pretty darn good about the bottom likely being in that case. As we watch this here, you would just a breakdown here below this wave circle 2, right around 91.784 would invalidate this count, and then maybe we'll look at something else. But till that time, potential, maybe head and shoulders here. I don't know. It's a pretty large shoulder. It's a pretty tiny shoulder. It's not very geometrically in line. Your head and shoulders generally look. Your shoulders generally look pretty similar. So I mean, it's not that it can't happen with this large discrepancy between them, but usually it doesn't. So is this a head and shoulders? I don't think so. But you can watch it there. Let me see here. There's no fear in trading. Reminds you of the There's No Crying in Baseball from what was that with Gina Davis and Tom Hanks, right? Where the girls were playing baseball. Whatever that was called. One of y'all are about to pop up with it. I know you are. But there is. Guys, listen. The only time you become fearful in trading is because your position size is too large. Because if you lose, you're going to lose a lot of money. It's not even because you don't know what you're doing. It's because your position size is too large. So, you don't even have to really know what's going on in the markets there. As long as you're using proper risk management, a lot of the fear you have will be alleviated. It's hard to cry over a loss of 0.5% or 1%. It's hard to be upset about that. And I'll tell you what, right now, if you are upset about that in trading, get out of trading. I'm telling you, for your own sanity, get out. Because it's just going to drive you nuts. You're going to lose money as a trader, guys. The thing you're trying to do is to be intelligent about it. Okay? You don't want to lose money just to lose money and, oversized positions and over leverage and all that. When you lose money, it should be because price hits your stop loss, which is well thought out and intelligently placed, And then your risk management, of course, just limits how much you lose to something very insignificant. So, that's the thing to think about. But I think a lot of you guys, again, this is something I've been harping on a bit lately is I think you guys spend too much time trying to get in on a 5-minute chart, expecting it to give you a day chart's movement. So you're trying to get in on a 5-minute chart to get tens of thousands of dollars of movement, basically, or thousands of dollars of movement, hundreds and hundreds of percent of movement. Guys, if you're going to do that, you're going to lose a lot of money. If you're using a 5-minute or 15-minute chart to trade, you should be looking for quick gains, simple gains. For instance, yesterday, I was trading USD CAD long yesterday. I had 3 trades, 3 just quick trades. It was smaller trades. I made 522.69, 56.77, and 81.36. yesterday. I made a quick trade this morning for $35.59. I mean, so, last night, easy 650 somewhat dollars, just very short-term trades, guys. Not looking to ride some huge trend. Now, yesterday was a great day for the USD CAD. It popped up over, I think, about 110 pips. Natural gas as well popped up almost 10%, 9.5% yesterday. So, I mean, those were some good trades overall if you wanted a little bit length in there. But if you're just trading short time frames, guys, you should be in it just to snag some profits and get out and just to rinse and repeat and do that. But you don't. And then you end up losing money that you don't have to lose. You see this? You are causing yourself to lose money. It's not Wall Street. It's not, whales or whatever else nonsense that you guys want to try and blame it on. It's just you. You didn't do the things that you needed to do to be successful. You were greedy. And so that's kind of where you get caught. And this is my reminder to you to not be that way. Because you're just asking to lose your money in that case. If you're going to trade based off a short-term chart, then you need to have short-term targets. If you want to trade on a long-term movement, then you need to use a longer-term chart. Everything else is going to get you exactly what it's gotten you, which is a loss of money. Doing the same thing over and over again and expecting a different result is the definition of crazy, right? League of Their Own, that's the movie, yes. Let me see here. Let me see here. Let's see here. Hey there, Brian. Good to see you. Hank wants to mention the DXY is going down every time it drops a few percent. We'll see what happens. Again, still trying to get to that 94,742 area. Until then, still a greater chance that it could potentially, drop on down. But right here, even with this 2 hour here, we're almost oversold on the RSI and Stochh RSI. 4 hour, we're pretty close as well. We could drop here a bit toward this wave 4 swing low. Daily, we've dipped up in here. We've locked down here, reset into oversold. It's still higher highs and higher lows. I mean, there's nothing really bearish about the chart at all. And even if you zoom out those larger time frames, as I've shown you, significant reason to be bullish. Probably more so on those larger term charts than the shorter term charts here. But we'll see what plays out. We'll see how it goes. Just know that, again, if the dollar continues its move up, risk-on assets are going to feel the heat. That does include Bitcoin. But again, we've talked about how Bitcoin could potentially still have a strong move up to end out this year, even if the dollar continues to rise. But, again, guys, right now, even with Bitcoin, we're still sitting here below the all-time high. We're still sitting here, this area right here. So, there's been nothing that says we have to continue going higher. I think we will. And until we get, larger movement down here, there's no reason for me to change my position on that. But I have noticed, again, as I told Discord, that we do have this rounding top potentially here. And so one of two things usually happens when you have this. Either you have a breakdown or you have a breakout with a strong impulse up. So this either becomes a distribution or a reaccumulation area. And right now, volume's been dropping off as we're continuing to do this. And right here sideways, volume's still kind of dropping off overall. Which kind of suggests that there's accumulation going on in that area. Because remember, if there's not, there's usually going to be a lot of spikes up there in that area. But, again, we can zoom in here local. We can maybe make a case for there being a lot of spikes in this area. Going across here and then again here. So, we'll watch and see what goes on here with it. But this does look nice and expanding here. 3, 4, 5. See, it looks like 1, 2, 3, 4, 5, A, B, C. That's what it kind of looks like we're looking at here on the 4 hour. So we'll see if it plays out. Let me see here. Stop losses, drawdowns, and fear, oh my. What are my thoughts on the Fed starting tapering? I mean, I think, again, I think the Fed's going to have to do things that it says it won't do or it doesn't want to do, or that it's not going to do. I think the reality of the situation, the Fed can only BS about it for so long. And then I think if things continue going like they have, they're going to have to do something. Again, just listening to Jerome Powell today speak, there's no definitiveness in his thing. A bunch of vagueness, a bunch of ambiguity in the things he was saying. Basically saying, yes, this, and then turning around and saying, yes, the opposite. And that's what he spent this morning doing, both with his speech and then with his questions that he was answering with with Congress there. And so, and he's doing it because, God, they're kind of screwed. They've kind of painted themselves into this corner, trying to keep this economy going. Guys, you got to think, we've been on this tear for 10 years. Yeah, we had the pullback last year, but man, again, when things are different, when things happen differently than what they normally do, you should be paying attention. And that was a lot different than anything that's ever happened. That's, significant, strong pullback like that. And then the rally afterward, I mean, to me, that's a warning that, we've got a bigger top in play. That's kind of like okay, well, here's your warning. Pay attention. If you're not paying attention, don't come crying to me kind of thing. And so, we'll see what happens. But yeah, I think they're going to have to... I think they're going to have to taper. Will they taper? I don't know. I think they're going to have to because they're bond buying everything. Is keeping these junk companies afloat. Corporate debt is diverging from the index rising there, which usually happens when there's a top coming in. The last time it happened was, I think it was matter of fact March of last year. Where you saw the indexes continuing to rise, and prior to that drop, you saw corporate bonds dropping. That's kind of like your canary in the coal mine kind of idea. Kind of lets you should be, again, getting your attention, letting you know something's probably going to happen here and you're not going to like it. But most people ignore that. Again, they're all on this hype that things are going to continue going up forever because stocks always go up, right? Bitcoin always goes up, right? And if it drops 95%, it's just a flesh wound, right? So, I think, again, I think they need to taper. Whether they're going to eventually do it or not, I don't know. Because, if you look at the drop in the Michigan Consumer Index, remember we talked about last month how it just fired on up to like 79, right? Huge run up, right? And then it's dropped back down below 70 this month. And so, when it's dropping, that means people are not confident about the economy. That means they're worried about it. That means they're not out there spending. Remember what I told you. If you need the economy to do well, you need to have people taking out loans. You need to have people spending money. So that U of M sentiment index or sentiment thing that it does, with that number dropping, tells us that people are scared to spend money compared to what they were. And that usually is a drag on the economy while that happens. So yeah, like I said, when it comes to tapering, I think they need to. I'm not sure if they're actually going to do it, but I think in either case, I think whether they do or they don't, they're kind of screwed. I think if they, again, they need to. So if they actually do it, and then this Delta variant coming up and, we're finding everybody and their grandmother seems to be getting sick now. All these schools that opened up early, some of them shutting back down because teachers and kids and everybody all getting sick and they don't have anybody going in there. There's a lot at play here. But the Fed can't just keep doing what it's doing just to keep doing it. Like I said, if the Fed had control of the markets, we wouldn't have had March of last year. We wouldn't have had the GFC. We wouldn't have had the dot-com bubble. We wouldn't have had 1987. We wouldn't have had 1929. You say, oh, but 1929 was before the Fed did. Well, fine, whatever. Since then. If the Fed could control the market and was the ultimate in what's going on with the market, we wouldn't have had those. They wouldn't have allowed it to happen because that hurt the economy. It hurt people. It hurt their mandates. Unemployment spiked. So I think it's silly when somebody says, don't fight the Fed, because I don't think they really understand what they're saying. Because what they're saying is the Fed is going to keep the market going, as if they have that control to continue doing that beyond when the market itself is ready to drop. And as I just gave you examples of, it doesn't. So, yeah. Kevin K, what's up, man? He says, I missed the dip knowing I should have bought in, moved some slower positions to it recently, still proving fruitful. Well, again, the idea is not that you have to buy the dip when it dips, guys. Buy the confirmations. If you're not in Bitcoin, there's no reason for you to jump in at the moment. Wait till you see some sort of, if you can see a pullback here and then a breakout through there, then there's your chance that you buy. This potential, leading diagonal here, get a little bit of a pullback toward the pivot. If we can get that, it stays above that pivot and it breaks out impulsively, which means larger volume, larger candle spreads through that descending channel resistance, there's your buy. This isn't your buy down here. This is a possible buy, but without any confirmation, it's a significant potential for loss here. And, I know everybody wants to do it because everybody you follow online always buys the dip perfectly, right? They always sell those tops and buy those bottoms just perfectly, don't they? Bunch of liars. Don't get caught up in that, guys. If you want to have more consistent success as a trader, look for the confirmations. Don't look to buy the drop. Look to buy the confirmation of the reversal. Or don't look to sell the top. Look to sell the confirmation of the reversal. Anything else, you're just taking on a lot more risk than you have to. Do what you need to do, but I'm telling you guys, to make it easier, buy the confirmation of the reversal, not the dip as it gets down there, okay? Hey there, Bianca. Good to see you checking back in. Data says, I also don't buy the dip, and I feel just fine about it. Something I've learned the hard way. Patience. Hey, Samaris, did you buy the dip, Anon? It is, guys. Oh, I joke around a little bit here, and I have a good time with y'all. But I hope you pay attention, because the things I say are not in jest when it comes to trading. I am fully aware that pretty much whatever I tell you, most of y'all are gonna ignore. Most of y'all are just gonna laugh and tell me I don't know, in your head, or yell at the TV or the computer. You're such an idiot. You don't know what you're talking about, Chris. Do what you need to do. Lead a horse to water, but you can't make him drink, right? I can share with you what I've learned over 25 years. It's up to you to be open-minded and humble enough to recognize that you don't know what you're doing. And especially if you've been trading for a few years now and you're really no better off than where you started, or very little better off than where you started, you're still new. And you're still not. Those are the worst, because they get out there and they assume because they've been trying to trade for 3 years that they know what they're doing. There's still that lack of humbleness. I don't know everything there is to know about trading, guys. I'll tell you that right now, and I've been doing it a lot longer than probably every one of y'all. I'm always open to learning more. I never state that I know it all. I think because once you do, you stop the desire to learn. You stop, your mind closes, your eyes close. You can't possibly learn anything else if you think you know it all. And that in anything, not just trading, but anything you do, that's the sign of the top of you right there. Everything's downhill after that. Don't ever assume you know everything. I don't care how long you've been doing a thing. I've been doing lots of things for many, many years. I don't consider myself a know-it-all in any of them. Matter of fact, the longer I've been in them, the more I recognize that I don't know about it, the intricacies. Yeah, the general stuff, sure. But the general stuff only takes you so far, guys. It's like using a big old mallet. Those ones where you kind of, at the fun parks, where you kind of hit the thing and it goes up and dings and says, oh, you're this strong or whatever. It's like using a big old mallet like that. That's the basics of whatever you do, trading or whatever. You want to get in and learn how to use, the screwdriver, or the pin, You want to get in there in the intricacies of it. Learn what you can about it. Yeah, crypto Twitter's slogan, have fun being poor. Gosh. It's like every time you think that crypto Twitter can't come up with something more dumb or more demeaning, they do. Have fun being poor, laser eyes, spaghetti hands, lettuce fingers. I don't even know, man. It's so much stupid stuff. Diamond hands. Stupidest stuff. People spend more time chirping around about that than actually trading successfully. But everybody wants to be liked. Everybody wants to feel like they belong. That's going to lose your money too. Andrew Bennett, what's up, man? Good to see you checking in. Oh, man, I guess you're a little bit late, but it's all good. Hank says he can teach all of us a 12-hour stochastic trick on Bitcoin. I'm sure you can. Bianca says, tuned in to crypto Twitter again after a while of silence. Left as soon as I could. TWC is all I need to learn and know. Keeps me grounded. Yeah, I appreciate that. But, again, guys, I try to be as realistic as possible with you. I really do. What we do is all about trying to learn. And I do it the best way that I know how. And I'm always trying to be better. I'm always trying to learn better, to learn more, to be able to provide information and education in a better way. Something that's easier to understand, makes more sense. So that way, less and less of y'all, drink the water, or more and more of y'all drink the water. Less and less of y'all just turn away when you see it, right? Let me see here. But anyway, there we go with what we're looking at there. TLT here, these are your bonds. Remember, this is the ETF for the long-term government securities. And basically, it's your safe haven, right? It's when people aren't feeling good about things, they get into it. They get out of the stock markets and other risk-on assets, and they get into TLT or directly into those long-term government securities, right? And so I've got this as potentially a 1, 2, 3, 4, 5 here, and then ABC. And so we'll see if wave 2 is done here at this 1 hour S2 pivot. We're looking for an impulsive breakout above the descending channel resistance, and if we can get that, that gives us a pattern target here of $5.74 above the point of breakout based on the height here, okay? But what we really kind of need to see along the way, that would carry price above this wave B swing high, this larger wave B of the larger wave 2 here. Because this is wave 2 of this larger wave 3. I don't even know where I have it up here. There it is up here. Wave parentheses 3. So this is wave 2 of wave 1 of that wave 3. I guess it's probably the best way to think about it. So getting above this wave B, though, right here at 151 and 82 cents is going to add a lot of confidence to the count. Minimum wave circle 3 target there of 156.26. Potential, leading to a minimum wave 5 there of 158.33. And again, that takes you above the pattern target when you do that as well. So, that's what we're looking for. We are up off the bottom here. I mean, this was the bottom back over here in March of 21. And if you guys are following us, we had it down and we've been following it back up there. And so, again, 1, 2, in this little local 1, 2. As long as this continues going up, I would be careful with risk on assets, especially, stock market and whatnot. Because, again, it's that move from, the money takes out of the stock market, goes into TLT to protect it. Remember, the only way your long-term government securities don't protect your wealth is if the government actually becomes dissolved, if the government is destroyed. As long as the government's still functioning, they'll be honoring that. And so it is, that's why people get into it. So yeah. So that's kind of where we are with that. Home builders. Let's talk about home builders, guys. So I posted this chart. Remember, I talked about this a couple of months ago when Peter Brandt brought it up. And over there, I think we were about this area right here. And I think he was looking at a potential head and shoulders right here. We got the breakdown, then moved back up, so that invalidated it. But I do think we've got basically an ABC as a 1, 2, ABC as a 3, 4, ABC as a 5 here. So it looks like we've got a leading diagonal. Now, whether this is 1 or A, we'll have to see. This move back up seems to be an ABC. 1, 2, 3, 4, 5 is A, B, 1, 2, 3, 4, making a 5 here. So in this case, the target potentially is going to fill this gap in here at 79.38, or it maybe even push up halfway into this this supply structure here in that wick. Maybe just below the R2 pivot, which sits at about $80.39. The thing we can note here is that OBV, lower highs and lower lows, while the same period price was printing higher lows and higher highs. When you have that kind of divergence with OBV, that your on-balance volume, that usually indicates that price will be following OBV. OBV is supposed to give you a look at the smart money, the professional money out there. So if the professional money is selling and price is going up, it means that retail is buying and the big players are selling into them. And so we'll just look for it. Now, obviously, if we get a breakout above the swing high here, that's going to invalidate it. But if we can get a reversal off that, it drops here below wave B at 74.18. That potentially gives you, if it's a wave 3, gives you a wave 3 down here around $60.79. Now, the other thing you can look at here is possibly that you get a bit of a Adam and Eve double top. So Adam and then Eve kind of double top here. And so that breakdown then below this swing low right here at 69.34 gives you a pattern target based on the height of that pattern there, $57.90, which puts you right about at this higher volume node area here. Makes a lot of sense, right? So we've got home prices are dropping. We've got a softening of the home prices, which we know we've got that. And now we've got this home builders index, ETF here, potentially showing a double top. And then if we jump over here to NAIL, which is the daily home builders and supplies bull 3X shares. Again, I think we've got a 1, 2, an ABC is 1, 2, ABC is 3, 4, ABC is 5. And then, we get a 1, 2, 3, 4, 5 is an A, B, and then getting a C working up here potentially. Or maybe even this is the ABC here, and this is, 1, 2, 1, 2. If we get a breakout above this, we'll indicate 1, ABC is 2, heading back down there. So, I mean, when you're looking at things that have to do with homes and stuff, they look like they're topped out, quite possibly. And so that in conjunction with the softening home prices, remember, if the homes start going down, that usually is a sign of what's going on in the economy. Because in a strong economy, your home prices and everything are going to continue to rise. So we had what's-her-face, the CEO over there at Sherwin-Williams, saying that, she believes this is the beginning of some big, huge move up. But I think she's going to end up being on the wrong side of history here. She's raised dividends for Sherwin-Williams there. Now, we also know that last week or the last month or so that, what is it? Not Lowe's, the other one. Oh, what is that other company called? Somebody tell me. I think it starts with an H, right? Somebody's got something. Home Depot, thank you, man. It's some risk, man. I love you, man. I could not think of what it was called. But Home Depot said that the month over month, their sales have dropped, which means, again, less people coming in and buying. And so in a strong economy, when everything's doing well, people are in there buying. And we're seeing multiple areas in the home sector that are topping out or appear to be topped out, appear to be reversing. So if they're reversing, home prices softening, I mean, that tells you that the economy isn't doing as great as we thought it was. And that usually means that the economy is going to follow lower. And with where we're at in terms of, cycles and movement and everything, I mean, that has the potential, as I've been talking about, to be a large move down. Now, many of y'all are not going to understand this, and many of y'all are going to not be, because you don't understand, you're not going to do it, but there's a ridiculous amount of money to be made in a downturn. Matter of fact, many of the wealthiest people significantly increase their wealth on the downturn rather than the rise up. Because you can short the hell out of stuff on the way down, and you get to buy at a bottom or at a low and just rise with it. But, again, most retail don't understand this concept. They freak out if everything's going down. They're not paying attention. They're not setting themselves up for, a heck of a life, as things return. Because the economy always returns. It always comes back. Now, it might take a little bit or whatnot, but it always does, right? The charts tend to go left and up, right? So I don't know, guys. I do what I can to kind of help you out here and understand things from a way that maybe you're not thinking about it. But again, all I can do is explain it to you and hope that you're paying attention and listening and maybe picking up something. But I can't do the work for you guys. You're going to have to do that yourself, all right? Let me see here. Let me see here. Mark, what are you saying here, Mark? He says, no longer looking back on what ifs. Oh, wait, he says, great news, I've had now 11 profitable trades and 2 tiny losing trades with proper risk management out of the last 13. I'm currently well in the money on my current 2 positions. Man, that is fantastic. No more looking back on what ifs, not worrying about if the trend has continued on without me. My FOMO has just been non-existent, and the clarity it brings, wow. I love to hear that, man. That is so fantastic. Because that's what we try to get everybody to. Not everybody is ready. Guys, listen. Not all of y'all are going to be ready at the same time to make those moves. You may say that you are. You may want to be. But your mind, everything just doesn't allow you to do it yet. But it will come if you don't give up. That's what it's all about, guys. Again, I've had members tell me a month in or a few weeks in how much the things we do have changed, how they approach the market, and it's been so much more successful for them. But I've had other members who have, I have one that sticks out of my head today. It tells me, man, listen, Chris, man, I've been with you, for 8 months now. And he's like, man, it just wouldn't click. It just wouldn't click. And he says, today, all of a sudden it clicked. He's like, man, it was weird. It was like, all of a sudden it just hit me in the head. And he said, man, I get it now. And that's the goal, guys. The goal is just to get it. It's not, I have to get it today or I have to get it tomorrow. The goal is just to work on getting it. Because once you do, it changes. It changes the way you view the markets. Like Mark says, you don't get all FOMO. You don't get crazy with FOMO. You're using proper risk management, so a loss doesn't kill you. If an invalidation hitting your stop loss, it's not the end of the world. It's just part of the game, and it's well done so that it's not bothersome at all. And these things help change your overall mindset, and they do that, which makes you a more competent trader. Remember, I said in order to be a successful trader, you have to be confident. You have to believe that the things you're doing are going to work out. You have to believe that, that they're going to do well. And the more you learn, the more that comes. And the less concerned you are about what everybody else is talking about online, what all the other large accounts are talking about. You pay a lot more attention to your own work ethic and what you're doing. There's so much shit posting there online because most of those people don't really trade. They don't trade effectively if they do trade at all. Almost all of them. That's why they do that. The large accounts, it's a way to get you over there to make their account base larger, which means they can then get paid to advertise to you. That's where they make their money. Don't believe the other nonsense. For those of you who are new and you join in on it, it's because you want to feel like you belong, like you're part of this community because there's this big, account online that does this. And so you feel like, oh, wow, yeah, that's what the successful people are doing. That's what we're going to do. No, it's not, guys. You don't know what you don't know out there. But there's a reason why you don't see me doing that. And I'm not interested in you following me just because, that. I would just as soon you not follow me. I want you to follow me because you're serious about trading. You want to learn how to trade. You want to pick up little hints, tips, tricks, and secrets along the way. I don't post all day every day. I've got work to do. I work with especially with our tier 3 members. But with everything in TWC and, doing all these things we're going to do to make things pretty crazy and awesome here starting, during Q4 here and into next year. New stuff, man, always. Always growing, always trying to make it better for you guys. I don't have time to post nonsense online or to spend all day arguing with people who have 3 followers and just started trading yesterday. I don't have time to do that. So that's what we do there. Anyway, I catch up with you guys here. I'm more than helping you, Boris. Well, I'm glad you feel that way, man. Boris just joined not too long ago, I believe, if I remember correctly. So, I love that, members continue to talk about and mention that it's working out for them. I'm always trying to do it better. I'm always trying to find a better way to do it, but it's good to know that it is working. So otherwise, there's no reason for me to be doing this, guys. It really isn't. Let me see here. Yeah, the mental clarity aspect is fantastic. The P&L will follow. Exactly. Again, home builders, nail. We're looking at home prices. Again, I keep track of the higher end homes. $1 million, $2 million plus. Seen a lot, man, over the last 3 weeks. A lot of discounting in that area. I've got a few friends who are brokers, real estate brokers. I talk to them, see how they're feeling about things, what's going on. There's still, the market's still good. It's definitely showing signs of pulling back right now. So, which is good news for me because I'd like to buy lower here next year. So, Bianca says, I chickened out of my OCO with SOL at a very small profit just before it started rallying up. I thought, well, Chris would say, never be sad about making profit, and then went on with life. Yeah, it's exactly right. Guys, you know what? Especially when you're newer, you're going to do that more often than you'd like to admit. You're going to get out before you should. Again, this is something over time that you become used to doing. But as long as you got out with profit, there's nothing to be upset about. Yeah, you could have had more profit. You also could have lost money. Instead, you made money. You locked in profit, on to the next trade. A lot of what you guys deal with on a daily basis as traders is the beating up that you do of yourself. And it's ridiculous. You don't have to. You shouldn't be beating yourself up. But you do. You beat yourself up over things that you don't know, that you can't possibly know. You got out because you weren't feeling secure in that trade, and then price went on without you. But you got out with a profit. You don't recognize the fact that you got out with a profit. All you do is recognize, oh man, I could have been in it for longer. I knew I should have stayed in. Don't do that. Don't beat yourself up about it. Whether you come out with a small profit or it hits your stop loss and you take a small loss because you're doing proper risk management, either case, it's time to move on to the next trade. It's all part of trading. Trading is not about the trade you're in. It's about the succession of trades. It's about over time. That's what it's about, guys. Stop hanging out over the most recent trade. You are not just your last trade. I know crypto Twitter makes you feel that way. If you get something wrong, heaven forbid, they're going to be all over you because they ain't got nothing better to do. They ain't making money, right? But the reality of it is, as a trader, you're never just about your last trade. It's always about your performance over time. Because you're going to have good days, you're going to have bad days. You're going to have good streaks, you're going to have bad streaks. It happens. It's part of trading. We all go through it, guys. And we go through it again and again and again throughout the years. You have to learn to forgive yourself if you lose a little bit or if you get a little early and just move on. Recognize that either you got your little profit or it hit your stop loss and you had proper risk management, so you lost just your tiny bit. Recognize that is done and over and it's on to the next one. That's all it is, guys. I know it's a hard thing because money is money, right? But you absolutely have to get to that point. You got to do just like Bianca did there. She's like, well, I made some profit. So I'm good to go. Let's go on to the next trade. Who cares what? It went off without you. Nothing you can do sitting here thinking about it, being upset about it, arguing with yourself about it is going to change anything. Right? Nothing's going to change anything, right? What's done is done. Allow it to be done. Because if you sit there and hang out and talk about it all the time and you beat yourself up about it, you're not letting it be done. And as long as you don't let it be done, you can't continue to move on. And you absolutely have to be able to move on if you want to get anywhere as a trader. You cannot be hung up on a trade, whether it was good or bad or otherwise. There's no place for emotion in trading, guys. It's easy to say, it's simple to say, not so easy to do, right? But that's the goal for you guys. And punish yourself for getting emotional and chickening out, of course. Yeah. You don't want to do that. You don't want to do that. Trade's over. It's done. There's nothing you can do to change it. Next. But guys, let that be a lesson for life. Let that be a lesson for life. In life, there are so many things that are going to happen you have absolutely no control over. So many things that happen, and even if you have control over it, it's done and over. In those cases, let it be done. There is absolutely nothing you're going to accomplish positively by sitting there and just hangering on it, continue, whatever that word, I don't even know what word I'm trying to use there. Just sitting there dwelling on it. There, we'll use that word. You're not going to accomplish anything by dwelling on it, by thinking about it, by beating yourself up about it. It's done. It's over. It's already gone. The only thing still attached to it is you. You're not allowing yourself. It's going to hold you back in life, just like it holds you back in trading, okay? Work on these things, guys. I promise you, the more adept you become at life, the more adept you will become at trading. You cannot feel one way in life and think, one way negatively in life and then think you're going to be a positive trader. It can't happen. You won't allow yourself to do it. Your mindset is negative. You're a victim. It's never your fault. It's always somebody else's. You can never get beyond it when things happen. You don't really believe that you have control. If that's the way it is, which is many people in life, that's how they feel. Because they don't have anybody just slap them and say, get out of it. But you got to, guys. You've got to, for your own well-being. Not just for trading, not just for whatever, for your own well-being. It's too easy these days, guys, to get caught up in the nonsense and to really just be miserable in life. Life's way too short, guys. Again, y'all know what happened over here with my brother-in-law a few months back. It just brings home the things that I have talked to you guys about for years now. It's a big reminder that what I've been saying about this stuff is true. Life is fleeting. We start dying the minute we're born. So let's make the best use of this time we're here. Tomorrow's never guaranteed. Believe we can do it, and let's do it. Let's make a change in our lives. That's what it's about, okay? Let me see here. Esteban, what's up, man? Good to see you. Mark, just joking though, for real. I wouldn't want anyone over at my house. What did you say there, man? Get a house big enough so that you can host the seminars in person. I'll trade my weight to the price of admission. Well, we're still thinking about, we were going to do something last year. And I was really talking to things and getting it set up. And then, of course, that whole pandemic thing happened. I was going to do something we talked about in Kerrville. And then the pandemic and everything happened. That kind of put things on a hold. So we'll see what continues going on with this pandemic stuff. I would really like to do something like that. I think it would be amazing to get those of you that can come, show up in person, maybe do a live stream of it as well for those who can't show up. Do live trading, live training, live trading there. Bring in some speakers, guest speakers, stuff like that. Make a weekend out of it or something. If you treat your trading as a business rather than a hobby, it's a write-off, right? So I'm still looking at wanting to do that once we get this whole pandemic nonsense kind of sorted out. So yeah, it would be awesome. Haranguing? Yeah, that was the word. Tell you right, I believe that's actually the word I was looking for. I'm as good a counselor as I am a trader, Kevin. Well, I appreciate that. Honestly, guys, the biggest compliments I get, I love it when people do well with their trading. I really do. That's, why we do this. But some of my absolute most favorite comments from y'all have been in regards to views about life and living and, things like that. Because at the end of the day, that's why we're trading, right? To make better lives, right? To have control, right? It's a lot of rights in there, right? So, and I've been, I didn't always grow up thinking the way I think now. It's taken decades of introspection and learning and forcing myself out of what I was before. But I can guarantee you this, my life is so much better. And I find that I notice opportunities a lot more often, a lot better opportunities than what I even did previously, because of my views on life, because of how I've changed that and the things that I talk to you guys about on a daily basis. So if me talking about it helps you get to that point, man, to me that's exciting, because it's going to make your life even better. There's just no way it can't. So yeah. Let me see here. Let me catch up with you guys here. Pixafan. Oh, there he is. Regarding Bitcoin, volume is dropping off since 29,000. Doesn't that give some confluence for this being a wave B? I guess you're going to probably talk about what, the daily time frame, maybe something like that. Let's see here. Or what time frame you said since what? Since 29,000? Oh, this right here. This right here. No, not necessarily. So we had this strong bit of volume rising here as we came down, right? So this shows you increasing supply coming in. But by the time we got here where we get this huge amount of supply, demand is showing up and really starting to take over. And we notice that because of this huge wick at the bottom here. After that, more wicks all around this bottom here, and then finally this reversal up. And so locally, volume locally here rose up through here, and that's kind of pulling back on this area right here. Okay, so what we look at here is supply was coming in strong through here, and it just kind of between this point and over here, where what was left of it tried to continue to come in. You had this one right here. Look at the difference between the spike in volume on this day, on the 19th of May, and the spike of volume on this low here, just a bit lower here, on the 22nd of June. Less than half the volume, slightly lower low, less than half the volume. And you had a supply spread candle here, price closed lower than where it opened. And in this one, price reversed, and it was a demand spread candle here where price closed above where it opened. So what you see between these two lows here is a transition from supply to demand. And the only time you get a lot of volume is when you have a lot of trading going on. But you get down here, and so supply becomes fatigued, and the market itself is not keen on going up. Remember, all the way down here, your big accounts were all telling you guys to buy the dip all the way across here. God, I think they were probably doing it from back here in February or March or whatever, telling you to buy the dip. By the time it got down here, all your big accounts started telling you it's going lower. Sell it, sell it, sell it. It's going lower. So there's not a lot of, on this first rally up out of here, there's not a lot of participation. At first, you get a bit of it as you first get this breakout here. But the participation is still worrisome because now the market's looking at this saying, oh my gosh, there's going to be all this supply coming in and we're scared. We don't really want to get in. We're going to wait for a breakout above it. So that's why you got your volume doing what it's doing. It doesn't necessarily mean that this has got to be a wave B. When you look at it there. So yeah, but again, as you get down here to these lows, notice the candle spreads are different. Notice the volume dips off less and less and less. Because there's less and less and less interest as it's getting lower there. And so all things held equal, price with assets like Bitcoin and other assets that generally rise in value, the price is just going to, move to the left and up. All things held equal. Without increasing supply coming in, it's going to drift on up because it's an appreciating asset. So it doesn't, the lack of volume on the move up just means there's no real supply coming in. There's no significant supply coming in. And again, we can take the fact that we had such a large spike here and whatnot, that it's exhausted in this area. It was pretty much done right here. What was left came in a bit more and then tried to come in here and again just got bought right back up. Demand was strong in this area, stronger than supply that had been used to get down here. The market wants it to move up, so it moves up. So that's kind of how you're looking at the volume and price action right there. It's not just simply, volume's dropping off and price is rising, so it definitely has to be a wave B. Volume dropping off as price is rising just signals that the trend itself is weakening. But that could be a wave, wave one or, wave 1, 2, and I don't know, it could be a 3, 4, and then this is 5, or 1, 2, this is 3, we get a 4, we get a 5, or, again, anything that could be going on there. In this case, we're starting to get, again, as I've noticed here, we've got this rounding here, and we've got that same kind of rounding going on right here, generally. So I am aware of that, but this could just be, again, the finishing of wave 1 up in here, maybe even push a bit higher, and then drop back for wave 2, and then wave 3 back up. There's absolutely nothing going on here that definitively says this is wave B. Could it be? Sure, it could be. But we're going to need further breakdowns on that to get some confirmation that that's the case. Right now, locally, we remain above this wave 2 right here. As long as we're above that, generally your view should be higher. Generally, if we drop down through here, then maybe you can look at possibilities it's going lower. But even that going lower, I think your wave 2 takes precedence over this being a wave B and a wave C coming down below 28.8. Because we're still really far up from that low. That low is 28.8. We're right now at 48.2. We're almost 20 grand above that, which is something like 40%, right? Or not 40%, like 90%, right? Advance over that. Something like that. Whatever. Having trouble with math today. You guys get what I'm saying, though. But yeah, so I mean, that's kind of the way I'd look at it. So we'll see what happens here. We'll see if we can get that follow through on it. For sure. You believe Tom Basso does a few get-togethers in Austin? I'll have to check that out. I'll have to check that out. If he does. I know there's some stuff going on. I'll be honest with you guys. I'm not I haven't been vaccinated or whatever, but I don't really go out too much. So I'm not a big excited person about let's go out and, mingle with everybody right now. When it comes to what's going on with COVID and everything, we're seeing an increasing rise in people dying that have already been vaccinated, double vaccinated and whatnot. So yeah, I'm just either way, not really a fan to head out there too much. I can't help but think that maybe a lot of it has to do with your own immune system and whether there's something within you that makes you more likely to develop complications with it versus just getting it and being done with it. But overall, overall the death rate is very, very low. It's like 2% or something overall, which is just really, small. But I'm not interested in jumping out there and testing out my theories or anything at this time. So it's like we'll go to the beach, go to the lake, do some stuff like that, until something gets figured out with all this. Oh man. Mark, you said you're a big fan of just chilling for the year and not traveling too much. Yeah, I like to travel. But right now with everything I'm doing with TWC and all this new stuff I've got coming out, we've got options training coming out in Q4 as well. We're gonna have the giveaways. What I'm gonna try and do, just to give you guys a heads up, I've got multiple PS5s and Xbox Series X's. I may be even giving away some Bitcoin. But basically try and give away at least once a week for a couple of months leading up into December. That's what I'd like to do. And so I'm getting all that finished out. We've got a new website coming, working on a new back end for our website. I got a new logo coming, a whole bunch of stuff. So I don't have time to really go anywhere and do anything. I'll tell you what, though, this 3-day weekend coming up for Labor Day is going to be nice. By the way, just a heads up here, guys, that Monday... I believe it's the Monday, right? I'll have to check whether it's the Monday or Friday, whatever. With that, not this weekend, but next weekend coming up, I won't be doing. If it's Friday, I think it'll be Monday that we'll be off, that the office will be closed, so it won't affect us if it's Monday. But those of you in TWC, it'll be a 3-day weekend for us. I know Adam usually tries to hang around and talk with you guys and whatever, but I never require him to do that. So if he is around, he'll answer you and whatever. But if not, just understand 3-day weekend here in the U.S. I'm definitely looking forward to a little bit of time off, but I'll probably be working anyway, getting all that other stuff together. So much to do. So exciting, guys. It's exciting to build things. Hank says he's vaccinated and believes in science. I love those kind of comments because it always assumes whatever science says today is the way it is. But as we know, historically, science is often wrong, right? It's not that I don't go out and do things. I do. I just don't get into large groups of people and do all that kind of stuff. I'm not really, guys, younger in my life, I was much more extroverted, getting out there and whatnot. As I've become older, I enjoy spending my time with a few close friends, with my family, more than anything else. I don't have this big desire to go out and, meet bunches of new people every day like I used to. I'm just getting old, I think. It is what it is, right? But I wasn't here to start anything with the whole vaccine stuff, guys. Everybody's got an opinion. Most of it's wrong, including probably most of mine. It's all good. Hank says the reason we can talk to each other on computers and the internet is because of science, and the reason why certain groups of people are dead is because of science too, right? They think of scientific reasons of why certain people were tested on or were killed out entirely historically because of science, right? Yeah, that doesn't work. I'm a big believer in science too, but I think most of science today has moved away from the actual scientific method and moved toward more hey, I'm just going to prove my position. This is something I've talked about, guys, with y'all before. I've got a couple of master's degree and a law degree. And what I've noticed in reading all these peer-reviewed journals that I've had to read and articles over the years is that there's a big discrepancy in what they're trying to prove and the questions they're actually asking. The questions, many of them are leading. So in that their results confirm what they're trying to say, rather than the results just confirming them or non-confirming them. And we have a lot of that going on. A lot of that being in the way that things are, the way in which language is used to put forth a position or a question or an understanding. Language is so imprecise, guys. The older I get, the more interested I get in linguistics because we see it all the time, So, but yeah, like I said, I wasn't trying to get everybody all up and think about the whole COVID thing. Again, like I said, we've all got opinions. We're probably pretty much mostly wrong, all of us, including me. So we're going to do whatever we're going to do, and it's going to be what it is. Not worth arguing about, guys. You're not going to change anybody's mind, whether you believe in one thing or not, or you believe in the vaccine or not, or you're concerned there's potentially bigger issues with the vaccine at a later date or not. You're not going to convince anybody else that sits the other way. So let's all just be friends and enjoy each other's company and not worry about that stuff. I think too many times today people get really into whatever it is that they believe, and they think that everybody has to believe. And if you don't believe what they believe, then they can't be friends with you. It's so ridiculous. People, everybody's got opinions and differing ideas and different ways they look at the world. Doesn't mean you can't be friends. All right? Just saying. Let me see here. So anyway. Hank, you're trying to do something. Hank, I'm going to tell you right now, man. You don't understand where the mistakes you're making in your arguments right now. I know you don't want to hear that. I know you like to believe that you feel like you know everything you're talking about. I'm telling you right now, you're not understanding where I'm coming from. There's no reason to get involved in this discussion, okay? So there are a lot of different things depending on as far as the COVID. There's a lot of studies out there right now talking about depending on your race or whatever, there might be some things in there that make you more susceptible to what's going on there. He also worked religiously. He didn't sleep much. We know that if you don't get 8 hours of sleep a night generally, and you're stressed out a lot, that it compromises your immune system. He also didn't go in when he first got sick. He waited till he was getting pretty sick before he went in. There's a lot of different things in there, Hank. So let's not get into this, okay? Again, like I said, we've all got opinions. Most of us are probably wrong. Or most of what we think are probably wrong. There's no reason to get into it. We're not going to change anybody's opinion about things, right? It's one thing, guys, in life and in the charts and whatever, it's not only one thing. There's always contributing factors to whatever you're looking at. Don't ever forget that. Okay? I think a lot of people in life view life as definitiveness. There's black and there's white. A lot of people have trouble with gray. But most of the world, most of what we do, most of the things we think, talk, discuss, concern ourselves with are gray. Again, depending on mitigating factors, other things that get involved. Nothing is really ever black and white. Even in law, right? Like I said, it's one thing I like to point out, guys. As somebody who has a law degree, who studied that for 3 years, had to do that. Well, 2.5, I got out early. The law is not black and white. At least not here in the U.S. In most areas, the most developed areas of the world, it's not. If it was, murder is murder is murder, period. But it's not. Did you kill somebody in self-defense? What type of self-defense? Did you kill somebody, what was your mindset at the time you were killing someone, the many states make, they give you special levels of how culpable you are for your acts, What was it? Was it a moment of extreme duress, were you so upset at your wife that you just went red and black or whatever, and you didn't even know what you were doing and you killed her? Did you walk in on her with another guy and then you proceeded to kill her? You didn't plan to kill her, but you ended up killing her. The law makes exceptions for this to an extent. It doesn't mean that you get away with it. But again, so nothing's black and white in the world, guys. When it comes to trading, nothing's black and white when it comes to trading. If it was, resistance would be resistance and support would be support, right? But not all resistance and support is created equal, right? So yeah. Anyway, so just interesting things there. Yeah, water is up, Mark. Water's been up this last year, wasn't it? Do you see it as something that should or shouldn't be owned? As long as there's people, things are going to be owned. That's all there is. I know there's a lot of grand political or philosophical beliefs in how everything would just be so honky-dory great if everybody had access to everything and nobody owned anything. But the reality of it is, ownership creates stewardship. And what we do know about that is we have seen various endangered species that we've allowed people to manage, I guess. If you think of hunting ranches, where you allow people to come in and hunt animals and whatnot, but your stewardship of those animals, you're making sure that there's more out there than are dying off. So you're growing the population. Whales, the same thing, whaling. If you just let everybody do whatever they're going to do, they're going to do what they're going to do. Certain people will. As long as there's ownership, though, then there's stewardship. And stewardship allows things to be used more effectively. Now, yeah, sometimes you're going to get people in there that are going to take advantage of it. Sure. But, again, if you just let anybody do it with the water or whatever, you're going to have people that are just going to do it and keep it. And do what they're going to do without really making it available in a monetary sense. Because everything's limited, guys. You have to understand. The first rule of economics is that everything is limited, right? Nothing is forever. Nothing is unlimited. There's always a limit to what's out there. And so if you give economic incentives to people to create stewardship of those things, then they do it. And we're all better off because of it. So yeah, it's hard to say, oh yeah, nobody should own water, because immediately people think, oh, they're going to keep it from people that need it and whatever. But the reality of it is, guys, we're dealing with limited commodities, limited water, limited this and that and whatnot. Now, government comes in and they create disincentives, and they create special incentives for the people that they like, and that creates issues. Yeah, there's that as well. That's kind of, being human, guys. It's tough. It's tough. But yeah, slavery is not abolished. Slavery is very well spread throughout the world. There is no abolishment of slavery. If there was, there wouldn't be things like human trafficking, which is huge. Slavery is still very rampant throughout the world, even in the U.S., some areas of the U.S. It's crazy. Let's see here. Is that I don't know? Is it Drady or Drade? It says we were told oil would run out in the year 2000. Man, I remember all that fear mongering for oil, and then we developed horizontal drilling, fracking, all that kind of stuff, and all of a sudden we've got a just ridiculously huge supply. The U.S., 15 years later becomes the number one oil producer in the world. All this stuff. Yeah, it's kind of crazy how that works, isn't it? I'm sure you can find some place in the world that holding slaves is a right, Hank, but you said slavery was abolished, and slavery was not abolished. Again, maybe you meant legal slavery, but as I mentioned earlier, language is imperfect. So, but I can almost guarantee you that there are some countries out there where it is still legal. Sure. I know that in countries where it's illegal, slavery still exists. I do know that, though. So there's that. Oh, yeah, man. Where Telluride is with his water rights? Yeah. You're not allowed to collect rain from your roof. Yeah, because the whole idea that the water, is going to eventually find its way to the streams and find its way downstream. And, you've got all the, here in Texas, we've got the Colorado Water Authority and all that stuff. Yeah. They got some crazy water rights in law here in the U.S. is huge. It's huge. I didn't study it in depth. I have friends that did. Man, what a cluster that is. What a cluster. Well, that is. Water rights are crazy here in the U.S. As far as that goes, yeah. The massive issues surrounding Y2K. Oh my gosh, yeah. COBOL being the dominant programming language. Everybody was concerned that because of the way that it's written, that it wouldn't flip to 2000 and it would cause everything to shut down. Oh yeah, man. I remember COBOL programmers were hugely in demand in 99. They were getting paid at that time like 6 figures easy at that time to do that. Yeah, so many systems were sold still using that programming. So yeah. Let me see here. Sol is holding its fresh new all-time high pretty well. Let me see here. What we got? Let me see. Let's look at Sol USDT here, right? I haven't looked at it in almost 10 days. So looks like we got, let's see, what do we got here? 1, 2, 3, 4, 5. So 5 didn't go up as high as we had hoped it would normally go, you know. And we got an ABC down, lower ABC here. Wave 4 came up shorter. Yeah, this is pretty bullish. You know, you've got this short wave 4 here. We're heading up. Usually we're looking for wave 4 to pull back into that wave 4 the lesser degree. It didn't. 1, 2. We definitely got a 1, 2 here, which gives us a wave 3. Oh, yeah, already up there. Okay, so zoom in here a minute. Oh, let's see. So probably a 1, 2 here. 1, 2, 3, 4, 5. See, 1, 2, 3, 4, 5. So probably a 1, 2, 3, 4 here. Probably work on that wave 5 going up there. Let me see here. That 1 hour Stochk RSI is topped out there and overbought. RSI is about to break into overbought. Overall, RSI probably be lower there. It's the 4 hour. But that daily, though, man, that daily, look at that. The daily's interesting. We dipped down into oversold here, broke back up, trying to cross bullishly. We've ran the pivots here, all 5 pivots. We pulled back to the R4. We're pushing up through R5 there, continuing higher. And again, with what we're looking at here, we've got a minimum wave 3 target up here of 112 and 31 cents. Let's see. Oops. If I'm looking at this here, potentially 94.57, and then may just get a final explosive move all the way up there to that 112.31. If we get 5 here at at either 86, 86 or 94.57, if we get it at there, I think I might be looking at this as a 1, 2, and then 3 at that area rather than this larger 3. Which means what likely will happen is this larger 3 might end up closer to that 112 area. If we look at this interior here. Because you got basically a 1, 2, 3, 4, 5. You know, and working this out here depending. 1, 2, 3, 4, 5. Could there be a 1, 2, 3, 4, 5? Yeah, so this 3 may actually end up being closer to this 112 up here as it plays out. Especially if this daily continues in with that. You can see right here, this is definitely accumulation going on here. Not just because we broke out, but if you're looking at volume dropping off through it, and then it picks up at the, as you get here and you push out of this range here. So that volume start picking up out of there. And then you get this kind of this high volume up here as we try and break out through the top. Right here, these 3 candles. And then finally it pulls back a bit, and now you've got volume ramping up as you start rallying once more. So that was your short pullback right there. But yeah, I mean, you've got volume dropping off through this range right here before it takes off. And I've got this as a 1, 2, 1, 2, but that's only because I've got this as a 1, 2. Could that be a 3, 4? I mean, I guess there's a possibility that could be a 3, 4. And if it was, then this would be an A, B, C, D, E triangle here. which then definitely has us looking up here toward that 112 level still. But I'm not convinced that could be a 3-4 right here. It's possible. 1, 2, 3, 4. Either way, I think we're definitely looking up toward that, 100 and then the 112 area, and potentially even higher. Obviously, you can get a lot of a blow off going on there or something. Sure. Let me see here. You almost requested a chart for EOS, but most everything depends on Bitcoin price action, so why bother? Diego, have a great day, man. I did not too long ago, I think I did an EOS update. Let me see here. Yeah, just about the same time I did that one, it looks like. Looks like we're just wave 2 right there. Quite possibly. I would look for a breakout above this swing high right here at 5.70249. Here on HIP, this is HIP BTC. But around that area right there, wherever your A, B, C comes in, I'd look for a breakout above that to go long. And then you'd have a wave 3 target up in this 9.45 area, potentially. Off that going on there. But, you've got to get through this. The bigger picture here says you got to get through this wave B at 7.666666, whatever. That's your key right there. Macro-wise, I think we've got a 3-4 here because I think we've got it as a 1, 2, 3, 4 as a leading diagonal. And so then we'd be looking for that breakout up here for 5, potentially getting around $18, I think. But you got to get above that wave B for that bigger one. And then anything goes once you're above wave 3 up here at 14.895 or so. For that wave 5 up there. Yeah. No, I think there's another chart for EOS, USDT. Yeah, for whatever reason, I can't remember why I grabbed the HIP BTC chart. It may have just had longer price info on it or something. I really don't remember why I picked it up there. But I was just letting you guys know that that was the price level on that particular chart. But that was where you guys need to look in that area there for that B, to jump above that to kind of get in. I mean, short term, I'd be looking at getting in a breakout above that wave B there and targeting this wave B up here. Short term, that's what I'd be looking for. If we get up beyond that, then you've got your other targets here, but, potential wave 3 right there at 9.45. But just for a short-term trade, yeah, I mean, I'd be looking for a breakout there that, from here up toward this, up there, 33%. So with this being a pretty good move up here, it's probably going to be another good move. I think we'd probably see these move pretty strongly up when they do rally. Which, if they are, then that means, we can blow out targets as well. So, yeah, but I'd look for an entry on breakout of that. So, yeah. Yeah, don't be trading on HIP BTC, guys. Just don't trade on there. I've heard nothing but just awful things about it. So don't do that, all right? Let me see here. Oh, let me catch up with you guys. Yeah. Let me see here. Oh, stocks, real quick here, guys. I didn't pull up the stocks here. I want to check those out real quick. Kind of show you what I'm looking at with those. See here, NASDAQ. We're in quite a few charts today, huh? Yeah, so NASDAQ, I think we're on wave 5 here. It's hitting the initial target right here, which is 15,142. We got a secondary target up here at 15,235. And this is the NASDAQ composite here, guys, just so you're aware of which one it is. 1 hour chart here, but could potentially leading itself to being the end of the end here as it goes, right? So we'll see. I've got that's the Nasdaq, the S&P E-minis. Potentially printing a ending diagonal here. ABC, it's got ABC for 1, 2, ABC 3, 4. And then what I told Discord was we look like we may be getting a breakout above here. If we do, potentially looking at this is 3 here. And then so you've got your thing going here. Let's kind of pull all this up over here. And so you got wave 5 in progress then. Right now, wave 5, C, 5 of C of 5 of 5 of 5 of 5. Just basically your successive tops there. In this case, we probably got a 1, 2 right here, probably a 3, 4, and then we'll get a 5 on a breakout. It might break out, and then if we do throw over, it should come right back in. So again, when you look at this in terms of tops in August, index tops in August, and then breakdowns in October, this could make it a pretty interesting next 2 months, right? It just kind of slowly rolls over for the next 2 months, and then, or for the next month or so, and then in the October, something kicks off and it just keels over and just dives. Not saying it has to happen, but definitely, something to watch out for. I've got this as an AB down here, and it's over here. I guess it's possible. Yeah, because this is going to be a flat correction here. So ABC down, ABC up, and then 1, 2, 3, 4, 5 down here. So with that being there, maybe it's possible we've got a 1, 2, 3, 4, 5, and then that gives us an A, and then B down here. And then this is C instead of 5. Either case, whether it's A, B, and then C here, or A, B, and then C finishing off up here, it does seem like it's nearing an end there. You can see that your daily remains below the overbought area, other than April this year and then September of last year. It stayed pretty subdued there. Your daily candle is engulfing. Not it's quite golfing. But you did have your pullback and then the rally off the R1 pivot previous resistance here. So again, could be locally here that AB lower or the AB closer. Nonetheless, looking like we may be coming up toward an end here on this. And so along those lines with the Dow Jones, I think we've got a potentially similar picture here. And so what I'm looking for here is a breakout above this recent swing high. I think we've got wave B here. And we just need to get above this swing high right here, this wave 3 at 35,631 and 19 cents. So anything above that, as long as it's in 5 waves, could potentially mark the end of that. And so the other one, again, I've got the AB down here and then this, it could be more similar to this where the AB is this recent area here. And then we've got C going up for 5 waves. But, looking for a target initially is always with, the ascending wedge resistance. A breakdown below the wedge support would be your first clue that top may be in, at least locally. You definitely want to see a breakdown below wave 4 here at 34,690 and 25 cents to kind of add a little bit of confidence to that. But you really need to kind of be looking down here toward this wave 4 at 33,271 and 93 cents to really start going, okay, I think that top might really be in. So again, if this tops out here in August, rolls over through December, comes on down, bounce up, comes down, breaks down below wave 4 here in October potentially. And that's that big move down. And you go, oh gosh. So yeah. So just some thoughts there. Do I expect another altcoin rally sometime in Q4? Oh yeah. If Bitcoin's going to blow off, I would expect things to be similar to what they were in 2017. Which at the end of the the last month there, going into it, your altcoins started kind of gaining some momentum there. You had that pullback, that last final pullback there in September, And then around the 20th of September in 17, it rallied from about that area. Bitcoin did. And so altcoins started kind of coming up. I remember we were trading a couple of them that we made a lot of money on, XLM and XVG. We were just gangbusters in and out of those multiple times those months. But by the time you got, midway through November, it seemed like all altcoins were rallying up through December and into January. And so I would expect potentially the same thing to happen if Bitcoin's going to do a blow off here, in this Q4 coming up, similar to that. I would expect altcoins to rally on up with it. So yeah. But that's what I'm thinking about that. By the way, guys, be careful with NFTs. I know a lot of people are out there getting all excited about it because you're seeing some people make lots of money with it. Again, guys, it's because you're new traders, right? And so you're looking for that get rich quick, right? I can't blame you for it. It is what it is. But the problem is you get into NFTs thinking this is something that's going to be forever because everybody tells you. And right now, there's absolutely nothing going on with NFTs that says it's anything more than Beanie Babies at the moment. Especially this minting apes and rocks and whatever. I mean, it's just stupid. But that doesn't mean it can't become something bigger. I'm not going to say it definitely isn't going to, but right now it just reeks of speculation, and that's it, of pure speculation. And the people that make a lot of money off it are those that got in already. You can probably still make a little bit of money on it as long as you understand what you're doing. But the likelihood is most people are going to get caught buying at or near the top, and they're going to be holding junk, worthless junk. It'll be like everybody that finally got into Beanie Babies, and the market went south, and they just had a whole bunch of stuffed animals. Not worth a thing. But they paid all that money to get into because they thought, hey, there was my retirement. So just be careful when you guys are out there with that stuff, all right? Take profits if you get them. Don't worry about if it goes up higher. Understand the market for what it is at the moment, which is just pure speculation. Yeah. We're too old to get the new paradigm in NFT values. You just proved it talking about beanies. Well, as a trader, I like to look at historical, things where people were feeling the same way, doing the same thing, with things that just didn't really make a whole lot of sense. So it is what it is. Like I said, I can't guarantee that NFTs aren't going to be something big eventually. I just, right now, I have a hard time believing it's anything other than just pure speculation based on what's being sold for what, guys. The rationale is not there. The rationale right now is I'm going to buy it because I'm going to be able to sell it to somebody else, to some other idiot who comes in and buys it higher. That's it. It's nothing about anything else. That's what it's, going on about at the moment. So yeah. You're salty about NFTs? I'm not, if I jumped in, it could have made a real boatload of money. It would have been fine, but I don't need it. So that's one of the good things about where I'm at this point. It would have been nice, sure, but no big deal that I didn't. I still make my money. I still trade, still make money trading, good bit of money. And so I don't have to worry about it. I'm still not sold on it, tell you, Ryder. The non-speculative use cases. And to be honest, I haven't done a very deep dive in NFTs, guys. I'll be honest with you. I'm not going to sit here and tell you that, yeah, I did and I don't believe it, whatever. I haven't had a chance to, honestly. But right now, the market itself is very much, it has everything that you usually look for in a purely speculative, everybody's got money to burn kind of market. Again, around the time of the Beanie Babies, stuff like that. Does it have a potential for something bigger as it goes on? Maybe, but your minted rocks and apes probably won't be worth flip on something like that. That's the part I'm talking about that I think is really just people have money and they see an opportunity to get in before everybody else, and that's all it is. But again, maybe I'm wrong. Maybe I'm wrong, guys. I don't think I am, but maybe I am, and that's okay. That's okay. Anyway, yeah. So, man, oh man, guys, you guys have been wonderful today. Lots of great questions and whatnot. Bitcoin, just looking for that breakout of this descending channel resistance. But we need the confirmation on the breakout above 49,365 and 10 cents here on Coinbase to really kind of say, okay, I think maybe we're headed up to wave 3 up here at minimum of 56,975. Until that point, as has been happening earlier when we had those levels and we weren't making to it, there's still potential for downside. And so if it goes down, I would be interested in this this demand area here with the EQ is right around that 70.5 retracement at 45,793 and 57 cents. I'd be really interested in that, or even just below at the S1 pivot on the 1 hour. I don't know. If you're getting below that, I think you're really getting iffy about it. It could still be a wave 2, but I think then you start focusing more on maybe this is 1 and done and this is 2, which means a deeper pullback. But right now, it is where it is, and I think it might be okay. Let me see here. 4 hour hasn't quite hit overbought yet. We've got a nice rally on a spike of volume and large candle spread through that 4 hour pivot above this resistance here. So I think, and we've pulled back. You notice where we've pulled back here. We're trying to find support right here on this. Look at this, guys. I always tell you guys to, I can't get it here, to look left, right? Look at that. This previous area of resistance here became support, resistance. Right here, resistance came down, broke up through it, becomes support. So we'll see if we can get some rally up through that. Maybe just a real short wave 2. But nonetheless, I think we're looking pretty decent at the moment. But again, still need to get above that wave B. Don't fool yourself into thinking you've got it said and done without getting above that wave B. All right. Let me see here. Look left. That's right. Like reading a book always. That's right. Yeah, so that's kind of where we're at here, guys. So that's where we are. If my dollar idea is correct here, we may be at a bottom or potentially nearby. We'll look for that rally above wave B there as well. And if that rally's above wave B, if you're playing FX, you want to be long USD pairs or USD base pairs. You want to be short your competing currency there. And other than that, roll with it. Have some fun. Make sure your risk management is set straight. Again, even with the stock market, even if August becomes a top, there's going to be a lot of money to be made, through September into October. And then if there's a drop in October, there's going to be a lot of money to be made shorting that down, or when you can catch the bounce, rallying on that bounce. It'll be short and quick, and then, further downside there. So if you're playing options, a lot of opportunity, with puts and calls. But please, guys, just make sure you know what you're doing with options. Don't get really exotic if you don't know what you're doing. If you're just starting out, be simple. Covered calls or something that's interesting might save you some money there. There's a couple of different ways to do it, but just make sure you understand what you're doing. Don't just dive in headfirst into options and just start doing it without knowing what you're doing. It's too easy to lose money with options. Okay? I've had a few members, unfortunately, that decided they wanted to jump in options and thought they knew what they were doing, and they went broke really quick, and they ended up leaving because they just didn't have any money left. And that's unfortunate. But just make sure that you recognize, as always, guys, the market you're in, what you're doing, your level of knowledge or ignorance. Be honest about it. Make sure you guys understand, okay? You're not here to impress yourself. You're here to make money. And you can't do that if you're lying to yourself, all right? You guys have a great day. Have a great weekend. As always, you can join us at howtotradetowin.com. We'd love to have you there. Again, there is nobody out there that puts out more content for less money. And the content they do put out is nowhere near as good. I'll give you that much. I know this because our members have been members and are members of other groups and trainings and whatnot. And they continue to tell me how much well above what they are doing everywhere else that they are doing with what we're doing. So It's not just me saying it. But we'd love to have you there. If not, again, I'll be back on Tuesday. What is Tuesday, guys? Is that going to be the 31st? Yes, the 31st of August, 2021. And we'll be back to do this again, all right? You guys have a great weekend. Trade safe. Remember, spread some kind words to everybody. And don't forget that the only thing you control is how much you lose. That's it. Just keep working on risk management. You guys take care, all right? We'll see you later.